So we're looking here at the higher time frame Ethereum chart, the long-term chart, which is showing here the structures on the 4-day time frame. And you can see that Ethereum has broken recently two important resistances, which is important because that tells us that the short-term momentum is up. But I hope that we also all agree that Ethereum is currently moving up in three-wave structures. So the move to the upside from the low in June is currently a corrective structure. It's not impulsive, even though the subwave structures may appear as impulsive, especially the green massive candle that we saw earlier this week. But I think it is too early to confirm that Ethereum is on its way to all-time highs. We first have to rule out some of the bearish potentials and some of the resistances, right, where things can still go wrong. So I want to tell you what I am tracking as bullish case, because obviously short-term momentum is up, so we need to understand what are the levels that now need to hold to keep the short-term upside momentum alive. We will do so in this video on the smaller time frame especially, but I also want to give you a larger time frame perspective, a good idea of what the higher time frame says. From an Elliott Wave point of view, there is quite a bit of uncertainty right now because Ethereum has basically been in a massive sideways range since 2021. I mean, this is crystal clear here. If you look at the chart, this is just a massive sideways range with ups and downs, but not impulsive structures to the upside, only three-wave movements to the upside, and not even a lower low now, which it would have allowed the price to tidy everything up, this entire mess that developed here before. But with the price forming a higher low now, things are getting a little bit more complex, and this is not easy. And so we need to talk about what that could mean for the price. Now, let's start with the most bearish one and go to the most bullish interpretation. And I will tell you what the important parameters are. And for now, I mean, short term, the momentum is up. So I'm looking for higher prices. In the next stage, a test of the red resistance zone. And then I'm monitoring the structure at the same time because people asked me, is it possible to maybe get another 1-2 set up to the upside? And I said, yes, but we need 5 waves up from the last low that formed in, I think it was in July or August. In July. Yeah, in July. So we'll take a look at that. But for now, on the higher time frame here, the most bearish case is the ABC structure to the downside, in which in the orange scenario, the price topped at the all-time high last year. And we've just completed a wave 1 to the downside. We're now moving up in a wave 2. That's the orange count. And also bearish interpretation. But both are short-term bullish because they both allow for higher prices in short term. The other more bearish interpretation is the white scenario, in which the price is currently moving up in a B wave after an A wave formed in July, August. And then in the resistance area between 2,751 to 4,355, we have to monitor this area for rejection and potentially the start of a C-wave decline. The only really bullish interpretation I can give here would be if we are forming some kind of a weird diagonal structure. In this case, and I'm monitoring that as the blue scenario, I'm monitoring for a possible 5-wave move up. And in the blue count, it shows you guys how that would look like. I'll show you that on the smaller time frame. But basically, we need 5 waves up for a confirmation that a larger low is in, because a B wave and a wave 2, white and orange counts, cannot be a 5-wave move up. And so in this bullish scenario, so that you understand where I'm coming from, the wave 4 probably already formed the low in June 22. The move to the upside afterwards was a 3-wave move, but it could be the wave 1 of a larger 5th wave. Then this low in April 25 was a wave 2. We have an A, B. Now we could be working our way higher in a 3rd wave, 4th wave, 5th wave. And let me all put that in order, then it becomes clearer because it looks like a mess at the moment. But we'll get that in order. But it helps you to understand, hopefully, the overall context of the structures here. So let me adjust the wave degree, and then it becomes clearer. And then the move up after the April low 25 would be an A wave. This would be a B wave and a C wave. So this is a valid scenario in which the price is currently working on the blue count higher but it has a lot to prove because it's not an impulse. It's a diagonal. The only reason why I'm considering this at this stage is because price is moving up in quite impulsive looking patterns. Not an impulse, that's a difference. But the momentum is up clearly, yeah. And the blue count shows you how a 1-2 setup could look like. Basically, 5 waves up in wave C of circle wave 3. This is what we were looking for. And this would like invalidate, basically, yeah, the orange and the white counts. At the very best, they would stay alive as alternatives. But let me simplify that. You see it now, hopefully, right? This is the bullish case. It is a low in wave 4 in June 22, and then a wave 1 up, wave 2 down. But the wave 1 was an ABC structure. So the third wave should also be an ABC structure, and the C wave should be 5 waves. And then we can get a 4-5, right? And so this is all a bit funky, yeah, which is why it's not, you know, anything that would be, let's say, a highly reliable structure. But I also wouldn't ignore it, because if the market forms 5 waves up, at least from what I can see right now, this seems to be the most reasonable scenario. You could also argue that the wave 2 actually sits here. This is also possible, yeah. Might even be reasonable to assume that. Might simplify everything a little bit. I like that even more. It doesn't change much. But it would still mean that we have a 3-wave move up in wave 1, right? So that makes it a little bit tricky. And then wave 2. And then, honestly, the third wave would probably be an ABC structure. I don't want to make it too complex, you know. This is deep into Elliott Wave theory. But basically, what we are watching for in the blue count then is, can we get 5 waves up from the last lows here in July, August? If that's possible, if the market does it, it would be a confirmation for the blue count. So let us now also take a look at the smaller time frame, and I'll show you what it means for the short term. Okay, and in the short term, this appears to be the scenario I talked about just yesterday. If you watched yesterday's video, you said, well, we did not have at the same time yesterday when I made the video a confirmation of a local top here in this internal third wave. But the idea was that over the weekend, the market could start this wave 4 correction with key support between 2,177 and 2,364. And that is the very first micro support zone we are tracking, because as long as this zone is holding, especially the 2,177 level, the upside momentum remains intact. And this is important because the upside momentum is the one that really matters here, whether it's, you know, the orange count or the blue count or the white count. All of that doesn't matter when it comes to the momentum and the trend direction. So you can have different counts that short term show in the same direction. Okay, so it's for traders, it's often not so much a question of, okay, is it now the orange count or the white count or the blue count? It's more about, where does support sit? Am I currently above support? And is the momentum still going, right? And what is my key level below which the scenarios are starting to break, or below which at least the upside momentum is starting to break? And that would be a break below 2,177. Then it becomes more likely that a top of sorts is formed and that the bulls are taking a break. At the moment, what we see here right now, this setback from the intraday high, is completely normal and was fully expected for the weekend, because on a Saturday, especially after a rally like that we had earlier this week, a consolidation is more than normal, expected, and it would likely be a wave 4. Again, a wave 4 is not nothing bearish, it's just a consolidation correction, basically a test, because if after such a rally, the 50% retracement, again, in this case, 2,177, can actually hold, the upside momentum stays intact and the price can still develop another high as per the white scenario. I'll of course keep you updated, but that should give you the key support levels in terms of micro resistance: 2,444 and 2,528. those are the resistances for the weekend. So that is the update on Ethereum. I hope it was helpful. If you're interested in additional updates, I recommend that you also follow us on X for additional updates, charts, news, and much more. You get plenty of additional updates because it's just faster, to just publish a quick update instead of just going through the whole process, editing, uploading the video and so on. It takes just a bit longer. Just different media. And so if you just want in between the videos, additional updates, feel free to follow us on X. I put the link into the comment section for you. Thanks so much. Have a great day. Bye-bye. And just a quick reminder for anybody who isn't aware yet, if you're only following More Crypto Online on YouTube, you're missing a lot of our day-to-day content. On X, we publish additional market analysis 7 days a week with primary focus on crypto, while also covering other major asset classes whenever they are relevant. It's also where we share real-time market updates, breaking news, exclusive videos, and insights that we don't always publish on YouTube. We also occasionally run exclusive promotions and special offers for our X community. If you'd like more frequent crypto analysis, faster market updates, exclusive content between YouTube videos, be sure to follow More Crypto Online on X. The link is in the video description.